Here's a retirement paradox nobody talks about. 1 in 3 retirees reach their mid-80s with their full nest egg intact or larger. They saved enough, they just never gave themselves permission to spend it. Today, we're talking about why and how to fix it. Hey Dave, how are we doing today?
I'm great, Derek, and I'm excited about today's topic.
Yeah, well, thanks for coming back and joining me today. Tony's out on assignment today, so we got a good one for you today. So, I think we did a similar topic, must be almost over a year ago now, and some of my clients called me up and said, "Hey, Derek, so it sounds like you're just giving me permission to spend whatever I want." Spend like a drunken sailor is what someone said, I think. But yeah, today we're talking about, basically enjoying your retirement, right? So it's a very natural phenomenon that I deal with all the time. I know Dave does as well, where you do all the right things, you get to retirement, and then you're in retirement, and you become kind of afraid to spend a little bit.
Well, I think that's just it. It's almost like the characteristics and the strengths and the skills to get you to accumulate that nest egg are kind of inherent in yourself, and then when you get to the point where now you get to actually spend it, it's an unnatural place to be for a lot of these folks.
Yeah, for sure. I mean, you've been saving your whole entire life, right? And now you have to turn that button off and then start pressing the spending button. It just doesn't feel natural to a lot of people. So let's get into it. So yeah, we're like the Cleveland Guardians here. We got a bunch of data we can go through. But basically, I'll just read a couple off and then we'll talk about them. So 2/3 of retirees said rising prices or market swings have made them feel less free to enjoy their retirement over the past year. Only 15% of retirees said days always reflect what matters to them most. So 15% of retirees said their days always reflect what matters most to them. And 3/4 said they feel at least some urgency to live well in the years ahead. But most of them are not doing that.
What I hear with all those stats, and I love all the stats, Derek.
Yeah.
Like you said, the Guardians, we're winning this. But with that sentiment, what it comes down to is anxiety.
Yep.
Right? People are worried about the future and how it could go wrong, and really, that's where we kind of come in, right? We're trying to help them sort through all that uncertainty, give them some numerical support to unlock that, that ability to just spend more money in the context of like still not jeopardizing your retirement plan.
Yep, for sure. Here's another stat. More than 3/4 of retirees, 76%, say they regret not starting to save earlier in their lives, while nearly the same amount, 71%, wish they had saved more. So basically, those are some giant numbers that are expressing regret, right, of not doing the right things to save for retirement.
And it seems like they're kind of conflicting. Like
Yep.
it sounds like, from what I'm hearing, there's a huge chunk of people ending up with a larger nest egg than they can actually spend, but they're telling themselves, "I wish I would have started earlier and saved more, so the nest egg could have been larger."
Mm-hmm.
So and here's the thing: like, there is not one right and wrong answer to all of this,
Yep,
right?
for
but
sure.
To be clear, if you're in the camp where you have this large nest egg, you've saved it, and you have regret because you're not living the lifestyle you want to be and you're leaving opportunities on the table, those are the people we want to help, give you information to make informed decisions on how can I responsibly spend this down, right? Now, there's other people who say, hey, listen, my goal is to just build up my legacy.
Right.
And pass it on to that next generation, and I want to continue to accumulate. I'm going to live below my means. I don't want to spend it all down to $0. So you kind of have to know what your goals are, but we can give you the information to at least equip you to make that decision.
Yep, absolutely. And more numbers here from what you just said. more than 2/3, 70% of American retirees believe it is very important their nest egg doesn't shrink in retirement. So they're 70%. That's a big number. They want to end up with more, it sounds like, than they started retirement with, right?
That's right. And going back to the last point, it's like you have to define what you want out of this,
exactly.
Right? We've got clients who say, I want my last check to bounce. That's my goal. And we've got clients to say that, I want to pass on generational wealth, whether it be, to fund education for my grandkids and their kids. Like, there's not right and wrong. It's defining what it is so we can actually drive in the right direction. Yeah,
for sure. And that's why, we talk about a lot of these, rules you might see on the internet, like, 4% withdrawal rates, whatever, rules you see out there, may or may not apply to your situation, right? That's why it's so important to set your own goals, because, my goal and, my neighbor's goal might be completely different, right? Like you said, some people are looking to pass down, some people are looking to spend it all. It's really what you are, what are your main priorities should really shape your plan, so you can come up with a plan so you don't have all of these anxieties, because the numbers are pretty alarming, honestly. And like, I knew obviously there was anxiety out there. I knew it was a big step. I dealt with that with all my clients for a lot of years, but 7 out of 10 people basically freaking out.
Derek, and you know what, you said something really important. It's a little bit of a sidebar, but I think it's worth talking about because I hear this on a semi-regular basis. Financial advice is not blanket statements.
Right.
It's not like across the board this applies. Like, once a month I'll hear someone say something ridiculous, repeat something Dave Ramsey says.
Yeah.
And I'm like, I don't know who his audience is, but I'm assuming it's like people who have a hard time controlling their spending and their debt. So he's trying to just get them back to break even.
Right.
But some of the advice that I hear repeated back to me, and the most common one is like, hey, I've got this low interest mortgage, right? So it might be at like 3%. And my number one goal is just paying off this mortgage like as my highest priority. And I'm going to use my, high yield savings funds that are earning 4% to extinguish this debt, which makes no mathematical sense.
Right.
But to that point, like, you've got to understand what your goal is, what you're driving at, what your priority is, how it applies to your situation, to develop your custom strategy. And that's something that that we do for our clients.
Yep, for sure. So let's hop into the next section here. Basically, what's the psychology of the saver who can't spend? Again, we're not saying there's anything wrong with that. In fact, we're kind of saying the opposite. Basically everyone has this problem to some extent. And like I said, it's a distinct shift from going into your spending mode in retirement from saving literally your whole entire life, right? When you're a kid, you're told you got to save, right? You got money for your 7th birthday, you got to put that in the bank, right? I just want to buy some action figures or something, some He-Mans.
Yeah, it's understandable how people get there, and I think the biggest thing we can do is just give you knowledge. Knowledge is power. Some of the tests that we run, to give you practical information, is we'll run a bear market test.
Right.
Like, when we run our financial plan, we'll say, well, what if the market doesn't cooperate? And we model that, well, a market crash, how does it impact your financial, plan going forward? And then the other test is the max spend. Eric, how does the max spend work?
Yeah, so basically we use an increased expense number to take your spending all the way up to where your Monte Carlos would equal 80%. So basically, how much more can you spend and still have a working plan?
Exactly. So then when life unfolds, as we call it, and you have a trip, with your family that comes up, in an opportunity where you could treat your family, or you have a home improvement project, now you have like a guardrails, we'll call it, of like, what's that spending bandwidth we have above the normal rate, where we can handle this kind of an increase and not jeopardize our plan overall.
Yeah, for sure. Yep, it's all about the knowledge that you can gain through a financial plan, and your spending level in retirement is one of those major things, as well as how to pull the money out, right? So maybe we'll sneak this in here. Withdrawal strategies. So just you have all these different kind of accounts you've been saving into over the years. What's the right order? And it may sound trivial, but there's I believe it's a Vanguard study that we cite all the time, basically saying that if you withdraw money properly, basically from the ground up, so least tax efficient to most tax efficient. Just by doing that, you can add about 5 years onto the length of your retirement plan.
That's right. So same, it's about controlling the controllables, right? Your investments are the same, your risk level is the same, but we're going to play what I'll call the tax game to your advantage, so that your nest egg will last as long as possible.
Yep, for sure. So let's wrap this up by talking about kind of the framework, and we kind of been hitting on some of these. So I'll touch on this first one again, and then we can kind of see where we want to go. But as silly as this sounds, some of my clients use this exact terminology, basically a permission slip. So that I'm obviously not in charge of their spending, but they essentially say, hey, can we do this? And they ask me, and as long as I say okay, then they do it. So having that financial plan, but then obviously using it and updating it as you go through retirement is so important. I mean, just look at the different landscape we're in right now versus 2019, right? Just completely night and day different. Interest rates are different. Just a different world. So we have to update those plans to make sure that their plans are still good, but more importantly, continue to give them that confidence that they can spend what they're set out to spend.
Exactly. And I think when we meet with our clients and those progress meetings, it's one of the biggest light bulb moments that I get enjoyment from, is seeing that client on the other side of the table, mm-hmm. and husband and wife looking at each other and like, hey, we just heard our spending power, like we can do that, like right. Big family trip and treat the kids every year and mm-hmm. and not lose any sleep over it. Like that's such a rewarding experience. Yep,
absolutely. And yeah, I think line iteming out certain expenses like that makes a big difference in a financial plan. So I got a client who I saw recently. They do a giant family trip every other year. So we put in a pretty big number every other year, and they get the whole family together, right? So that's what's important to them. That's their goal, and we figure out how to make that happen. There's one more. The fund money account is also a good one on the line items. So basically it's just kind of that spending gap, right? Where you got all your basics covered, but you don't want to be pinching pennies, not going out to dinner or doing the things that you want to do. So I put in $5,000 a year just in spending money. Essentially helps people out quite a bit.
Yeah, and a tool that I actually had a client this week tell me about, the way that they look at it is they say, hey, we kind of segment some of our investment accounts out, and we've actually carved out what I'll call the higher octane bucket for that fund money purpose. So right. the vast majority is for living expenses and the nuts and bolts of living, but then we've carved out this higher octane part, and the goal of this is twofold. Fund money, and then also anything that passes on, we want it to grow as much as possible, and it's going to be a legacy tool. So I thought that was a cool way to do it, to kind of segment it out, and then you can kind of keep yourself on track where if the market's not cooperating, maybe the fund money bucket has shrunk a little bit, but you're not jeopardizing the parts of that that's actually funding the the retirement expenses.
Yep, for sure. That's a excellent point for sure. So one last thing I'll touch on here, because I thought it was a good way to wrap up. This is a pretty good quote actually. So we're talking end of plan here. So we've been talking about, hey, people are maybe end up with more than they started with in retirement, based on their spending or that lack thereof. But when you pass away, right, at the end of the plan, as they say, your money's going somewhere, right? So you can see that being enjoyed while you're alive, or it gets spent on your behalf, which is a pretty good way to say it, honestly. So yeah, make sure your plan is hitting the goals that you want, because this is your chance to kind of direct how it goes, and you've been saving your whole life to get here. So make sure you have a plan that really tackles all the goals that you want to hit when you're in retirement.
That's well said. My client this week said to me, Joe, we can either fly first class or the kids are going to fly first class. Yes. So that's kind of how that stuck with me this week.
Yep, absolutely. Yeah, that's a good one. All right. Well, any parting shots here, Dave?
I think this is an important one, and really step one is kind of what we talked about before, and just giving it some thought. Like, what is your priority?
Yep.
How do you want your money to work for you? Because that's going to define everything in terms of how you structure this.
Yep, absolutely. So make sure you hit those goals in your plan. Make sure you plan things out so you can enjoy your retirement how you want to enjoy it. So thanks everyone for listening this week. If you guys have any questions, comments, hit us up at info@swpconnect.com, and we'll talk to you next week.
The opinions expressed in the podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any investment, legal, financial, or tax strategy. It is only intended to provide education about the financial industry. Please consult a qualified professional about your individual needs.